You're online, Kyle. Please start.
Jadar, where are you from?
Hey,
hi,
Gary.
everybody.
Hi. I'm from Bombay.
Hey, guys, we're live. Guys, hi. Hi, guys. So I know everyone's super excited. We've got a big conversation, but we are live. So welcome, audience, to the show. We were just talking off pre-show and I bled a little bit in. So you saw behind the scenes. Not always do we let you in, but today it's Tuesday, so why not? But welcome, everybody, to another edition of VCTV. I'm Kyle Lacotte, your host. And today, we're going to be continuing our packed week of double episodes every single day here on VCTV, talking about all of the technologies, industries, and everything in between that are reshaping and redefining our lives. So we talked earlier in the week about investing in deep technologies and looking beyond the stars. We also talked a lot about food and food technologies. Now today, we're going to have a ton of fun talking about manufacturing, supply chain, and logistics. So while we talked about all of this new food and food technologies, the marketplaces in which we are buying and transaction, now we're going to talk about manufacturing, not just those goods, but all goods. Later today, we'll get into consumer and e-commerce. So you can see the trend here of where we're going. We're building everything leading up to the end of the week when we recap all of this and where you need to be paying attention in the world of venture. So now, with that being said, a big thank you to you, our live audience, for tuning in at any moment today. If you have any questions, drop them in the chat, and Elena and I and the team will do our best to ask them to our guests in the real time. If not, we're all available online 24/7, 365, and we'll share where you can find us to continue the conversation. If you like what you heard, click subscribe, give us a thumbs up. Also, feel free to reach out. We'd love to hear from you. If you're an investor and you'd like to be on a show like today to share your thoughts and insights, please do reach out. We'd love to find the right show for you and entrepreneurs. As I've said before, and I'll continue to say, this is not just a stage for us as investors. This is also a stage for you. You have the chance to join us here on a show of an episode of VCTV to pitch us as investors and also the live audience. Do reach out. We'd love to have you. And also a big thank you to Elena and to the entire LA Token team for making VCTV possible every single day on your screen, your devices, anywhere you may be around the world. Now, that being said, I'm Kyle Lacotte. I'm your host. Let's get started. Let's talk a little bit about manufacturing, supply chain, and logistics. I'm joined by some great experts from around the world who've joined to share their thoughts and insights with us. And so let's go ahead and get each and every one of them introduced. Warren, welcome to the show. First time with Elena and I here on VCTV. It's a pleasure to have you. If you can, a little intro and a little background for the audience, please.
Sure. Can you hear me now?
Loud and clear.
Great. I turned the mute off. Background, I've founded 10 companies now. 9 of the 10 were very successful. The last one I founded wasn't, and we'll get into that a little bit later as to why. But I speak Chinese fluently. I've been to China more than 110 times. And I've manufactured about 350 million plus items in China. So I've worked with hundreds of factories over there and have manufactured a large variety of products from appliances, consumer electronics, packaging, and bags and other things. So manufactured a lot in China.
Wow, I think you and I might rival for the number of visits to China. We'd have to get passports out and go red stamp to red stamp, but it's an absolute pleasure to have someone like yourself join, and excited to dive into why that one of those 10 didn't work out, but we'll get to it as you said. Thank you very much, Warren. And Giappaolo, welcome to the show. It's an absolute pleasure. I know you're hosting a bunch of shows as well, so you get to be on the other side of the table for today. I get to ask the questions, but nonetheless, it's a pleasure to have you as you get the chance to relax. A little intro and a little background.
Oh, thank you so much, Kyle. Thank you, everyone, for having me here today. Name's Gianpaolo Parigi, and I'm a VC, former investment banker. I'm on the board of a U.S. asset manager and operator, and I'm the chairman of a single family office. I've been 30 years in the industry, lived across the pond, both in the US and in Europe. And I've dealt with over 75 countries in 5 continents in investment banking, merchant banking, either as a principal or as an advisor or both. So it's my pleasure to be here today, and we got a beautiful agenda for the day. Kyle,
Yes,
back
we
to
do.
you.
Thank you very much, Sir Sardar. I almost got it. We're getting there. We're working through this. But welcome back to the show, my friend. Little intro, little background.
Thank you, Carl, for having me on the show. This is Sridhar, and I'm from India. I stay at Mumbai. I've been working with large multinationals, running supply chain and logistics and CFO and CEO roles. And then subsequently, I've been with part of large funds, investing in India and the Asian context into infrastructure, real estate, and industrial and logistic assets. I also have a venture capital impact which I run, which is a $40 million fund. And apart from that, I run the family office, and I'm the CEO for the industrial and logistics business of the Hiranandani Group, which is a well-known top 3-tier group in India for real estate, commercial, industrial, and logistics. I run their entire business. And my JV partners are Blackstone, so which I just recently did the deal with them on the supply chain and logistics in India. And really look forward to some interesting discussions with Kyle leading as usual.
Sir, you've been up to some work since we've last spoken. Now this is going to be exciting. All right.
So that was a different role in impact investing.
That is true. And now you've switched it up. So we're excited to see this other side. But last but not least, Mr. Gary Fowler, who may or may not be joining us poolside today, as he looks like he's kicking it relaxation style, getting in those last few days of summer. Gary, welcome. A little intro, a little background. Oh, you're muted.
Yeah,
you're
sorry,
having so much fun.
I had to switch my MacBooks. My other one, the sound went off. Anyhow, thanks a lot. That actually is a very famous person's pool that I went to a few months ago. So that's actually a real pool, an extremely famous person's house that I was at their house. So it's not mine. That's their guest house, by the way. Anyhow, my name's Gary Fowler, and I'm a serial entrepreneur. I've done 15 companies. I've been doing startups for 35, 36 years, and I just love them. I'm into artificial intelligence. My biggest exit, I was on the original management team of Click Software, which was sold for $1.35 billion. I also started Yva.ai 4.5 years ago, and Yva is closing in on unicorn status right now. So I just love it. I also started the first accelerator in Russia, and the #1 corporate private accelerator, GVA LaunchGurus. Today, I have GSD, Get Shit Done Venture Studios, and we help growth stage companies with funding, with operational management to be able to go global using Silicon Valley as a port to the rest of the world. So thank you, Kyle.
Wonderful. And gentlemen, welcome all again to the show today. And we are again talking about the topic around manufacturing, supply chain, and logistics, all of which have been continuing to shift and shape, and if anything, digitize over the past decade and then some. And really in the last year and a half, we've seen a surge of digitization that has been talked about and really starting to put in place in these last, like I said, 12 or 18 months. Now, what does that mean going forward? So I would love to hear from each and every one of you, your views of the current state of these 3 areas, as they are so interlinked. And we know what's happened in the past 6 to 9 months. You know, a lot has changed, a lot has gone more localized, a lot has been more impacted. But to each of you, what is the current state of manufacturing and supply chain? And Warren, let's start with you on your view of where things are currently and looking forward as well.
The supply chain, particularly with Asia, is much more constrained than it was before COVID-19. However, I've still been able to manufacture goods over the last few months and get them out. we've had a few extra delays, but COVID-19 definitely affected China and other Asian countries. And supply chain in general around the world, I think, has probably been affected more than many other markets. Any physical goods being manufactured have been definitely affected with COVID-19 in the pandemic.
Absolutely. We've talked on previous shows about the idea of hyper-localization, which we're going to get to as well around localized manufacturing, and talked a little bit about 3D printing a few days ago, and if that's something that may or may not be here. And you're making great points is how things have been so impacted, and what that means going forward, we're going to get to. So Gianpaolo, same to you. I mean, what do you see as the current state of manufacturing and supply chains as it sits today?
Well, I presented a master class here on Latokan a few weeks ago, which I invite everyone to go back to watch if they're interested in this, where I could elaborate more than here. But definitely, we are so intertwined on a global level after 20 some years of full-blown globalization, and now to have to unplug and reset on a regional base, it's somewhat of a quagmire, if not a full nightmare. I hope that we will get out of this predicament and activities might resume as it was before, because we had reached an equilibrium in the world that was a result of decades, if not centuries, of advancement and development. And to have really, frankly, to press a hard reset button and to start from scratch, it would not be in the vested interest of the consumers to begin with, because they will end up paying the price of the unplugging of all this mega grid that we created globally. So as I say, I'm looking at the future with optimism, but with a degree of caution, because obviously there are tensions that need to be eased out. We will not see any dramatic changes until the US elections anyway. And I think well into 2021, we will not see any really significant modification. For the time being, we'll have to live with the vagaries and the hiccups that this situation produces. I mean, we are in a turbulent period, and there might be delays, there might be cancellation and defaults on orders. The situation is what it is. We gotta navigate the straits.
Yeah, and there's a lot intertwined there, which I'm going to hold on just for now, and because I want to get to Sridhar and also Gary. Sridhar, your thoughts as well on what you're seeing as the current state of these industries right now.
Post COVID-19, Kyle, I think the pandemic has really driven us up the wall in terms of the supply chain disruptions that have really impacted not only in India, I think across the Asian context, as I see, and also other countries. I think pre-COVID, if you just take a page back and then see everything was going great, and suddenly COVID came in, and then there was lockdowns. There are different ways the different countries dealt with it. I think otherwise the global logistic market was projected to grow at a healthy growth of 17 to 20% on a CAGR basis. Now, if you look at it, the year-on-year growth for 2021 is 17.6, which is down by 10%. So that's a huge volume on a global basis that I'm talking about. But still, the physical numbers look good because you still have essentials, manufacturing, which has really shaped the supply chain and logistic market, like your healthcare, safety, productive equipments, all the masks, the medicines, and pharma and healthcare. So which is really increasing supply of essential commodities, creation of a supply chain COVID task force, and growing the demand and distribution of these products. The supply of essentials and these pharma and healthcare industry will further boost the growth of supply chain. I think people have, while the supply chain business has got disrupted, people are finding innovative models. Earlier, used to believe in just-in-time, vendor-managed inventory, JIT, VMI, or think global exports. Now people are thinking about local digitization, resizing their warehousing requirements. So it's really taught us a lot of things in the last 6 months that we are getting there. I mean, because I also deal with a lot of real estate asset class investments. I think industrial logistics and warehousing is the the demand is muted, but I don't think so for it to continue for a long period of time, because people are rebooting themselves as they go along in the Asian context. One thing about Asia is expected to have the largest market sizing, as the region has taken a lot of measures in this COVID-19, as you would all see, to contain the virus. China has also taken, I heard Warren, and I fully believe what he's saying, and I know what the kind of things he must have gone through to manufacture and put it in the marketplace. But China has started to recover from the second wave of COVID-19 too. So the World WHO, for that matter, has even appreciated India for having taken those measures of lockdown. But they caused their own, the pandemic caused its issues, which we had to deal with. So this has allowed the logistic and supply chain companies to meet the consumer demands during this pandemic situation. So I have literally seen different organizations adopt different stuff. So I expect to see a broad overall, I can summarize by saying, a broad overhaul in the supply chain infrastructure, moving towards more flexibility, more multi-level sourcing at the local level, moving to regional level to eliminate, standalone or single source dependencies, and to establish a flexible and adaptable supply chain. I see this being adopted by a lot of multinationals in India, foreign companies and Indian companies.
I love that, flexible supply chains, because we all know that most supply chains have traditionally been not so flexible, and there's many reasons for that as well. I know we can all talk about that, but I think you're bringing up a good point. On previous episodes, we've talked about dynamic value networks that some of our friends over in Singapore have mentioned. We've talked about, again, that hyper localization, these things that have been teased or just figments in the idea of what a supply chain would be at full throttle, now are looking like there's something you have to consider more than ever when planning this. Gary, to you, what are you seeing as the current state of these areas? Oh, you're on mute.
Sorry about that, Kyle.
No worries.
I mean, so if you look at it today, look at what happened. Let's just take meat production. When we had COVID in Kansas, it totally disrupted the entire supply chain. I mean, look at, on one side, we have the supply chain and, the Amazon effect that dramatically went up, 50, 60%. And then at the same time, restaurant went down. So I don't remember who was saying it, was Warren and Giampaolo, but the system was balanced. Now the situation is, we have a chance with the digital transformation. I was on the original management team of Click Software, which is a service chain optimization company that was bought by Salesforce. So the same methodology, think about how antiquated the system is when they're still doing paper tickets, right? The system needs to be improved. And I think right now, today is the greatest time, because through digital transformation, we're forced to make those changes in the system. You're right, it's not balanced, but the system should be able to correct itself up. Yes, there's problems because we had too much inventory here, too much inventory there, because restaurants weren't buying, but Walmart was buying, ShopRite was buying. So it's changed. But the good news is, from my standpoint, and I love artificial intelligence. We need to bring more intelligence into the system to help it become much more efficient, which is what we did to Service Chain for Click Software. And we did that, and it totally disrupted the entire service chain marketplace. So delivery of fuel oil, et cetera. But that same technology has to happen now. And, we're right, because I remember one conversation, they were saying some of the supplies came on ferries, right? They were ferried across, then it would go into a cargo ship and then come over. But right now we've got to relook at it when we've got to optimize. Let's use the lessons learned. This may not be the last time we go through what we're going through now. And by the way, this may not be the worst time. It's not Ebola. It's not something that could be a lot worse. Let's figure out how we can make it more efficient. This is now leveled the playing field globally. This digital transformation has really leveled the playing field for all of us, and companies need to look inside and make it much more efficient.
Yeah, and one of the things I'll add on that is, COVID-19 and the past, aside, looking towards the future, I think what's common here and also in previous discussions is that the idea of supply chains need to change. Sridhar brought it up, is that the idea of that flexible and dynamic supply chain, right? That not everything can be so dependent in one particular regions around the world. And we saw this as well, and similar to Warren, I don't have as much experience, but have some experience as well in the space that, we saw a lot of manufacturing happening in Asia and specifically in China, and that was starting to move and shift, where we were starting to see other regions and countries starting to take that role on, which was starting to move this regional manufacturing to then, as I said earlier, is this idea of localized manufacturing and local distribution centers. Now, when we add in the layer of hyper-localization, which is what we've had as an impact recently, that changes the game. Now, I think to everyone's point, this isn't something that's going away. We may get back to that idea of a big globalized movement that we had, to Giampaolo's point, but right now, it looks like that the idea of some of these pieces are here to stay, and they were coming and they were being inputted, if you will, for some time, and they're now here. And Warren, I want to come back to you. I mean, you mentioned you had 10 companies and 9 worked, but 1 didn't, and you wanted to talk about that. So I want to talk about it, if you're up for it. Is what happened? Why did that one company not work? I feel it's relevant to the conversation. Oh, you're on mute.
It's almost never does the first idea in a business succeed. You have to pivot, adapt, adjust, and evolve. Well, if I go back to maybe 8 out of 10 of those companies that I founded, the first idea was a C or a B, but we pivoted them all into A-grade companies and A-grade products. And the entrepreneur that isn't willing to pivot and is just so stuck on his original idea will almost always fail. So I had a little interesting health issue come up. So I founded this company 2.5 years ago doing vibrating roller balls for exercise therapy, massage therapy. They would vibrate. Went through my standard supply chain process, which is to interview at least 30 suppliers. One of the biggest mistakes young entrepreneurs make is they go with the first supplier they get introduced to. And that can be cataclysmic. If you get the wrong supplier, that's 10 times worse than having one wrong employee. You can swap out a wrong employee fairly quickly, a few weeks, but you have the wrong supplier and it can set you back for a year or 2 or more. So after getting this business founded, getting the product built, getting the orders shipped over here to the US from China, I was diagnosed with a terminal illness called ALS, Lou Gehrig's disease. And so I chose to step down as CEO and to not be engaged. And that took me away from managing the pivots, the evolution of the product line, the evolution of the company. And so I basically, for health reasons, I was kind of forced to just step away from it.
Well, I mean, that's as unfortunate as it is. It doesn't sound like it was a failure. It sounds like you still found an opportunity and still was able to make something happen, which is pretty phenomenal nonetheless.
It still did really well. It didn't blow up with success like the other ones did.
Understood. I mean, hey, success is all in the all in what you make of it. And it sounds like you've put together a successful company and with your past and your history of just around this industry. So actually a question on that. So you gave this piece of advice of making sure you interview suppliers. what were some of the lessons you learned when working with various suppliers? Because a lot of entrepreneurs just jump in and think that, like you said, the first supplier is the one they want to go with. And there's so much that can happen and that they should be looking for. Any advice to those?
When I lecture on this topic at the local universities, this is one of the biggest things I focus on. Find 30 suppliers, interview them all, ask them dozens of questions. Then in the end, if you can, it's even best to go visit your top 3. Have a face-to-face. I used to go over to China, like when I did these vibrating roller balls, I went over and visited. I interviewed about 40 suppliers. I went and visited about 14, 15 of them, narrowed it down to the best one. And if you go through that process and you pick a supplier who is well aligned with you, who has experience in your market, who is trustworthy, you get the right supplier, your life is so much better going forward. And so it's absolutely critical that you pick that right supplier. And it helps if you can actually go meet face to face.
Absolutely agreed. I think that's something that's so undervalued by most, and it's definitely worth it. I guess in today's day, that's going to be slightly different, but to each of you, also want to talk a little bit about how you're seeing things on a global level. So, for so many years, it was China where we looked at doing manufacturing. And over the past couple of years, we started to see a little bit of that shift into some of the other countries throughout Southeast Asia, whether that be Vietnam, whether that be Taiwan, which is also where Foxconn is based. We started seeing a little bit of that slip into Australia. We see quite a bit. Shadar started to go into India. We've seen a lot happen in Mexico, and then now in Europe, there is quite an initiative to focus around manufacturing in Europe. So we'd love to hear from you all what you see happening on a global level around these manufacturing. So John Paulo, I'm going to start with you. You mentioned, hopefully soon we'll get back to the idea of globalization that we were all in at one point. But now with these new manufacturing centers, do you see these regions starting to take off? Do you see localization around manufacturing starting to be kind of the new norm for companies that are looking to build and maybe also reduce cost in some cases?
Not really, except a few privileged countries. If you take a look at the 5 largest manufacturing countries in the world, the US is not one of them in terms of output of billions of dollars per annum. You got in Europe only Germany and Italy, and you got Asia with China, Japan, and Korea. Those are the 5 manufacturing, let's say, powerhouses. Of course, the United States is next. And I don't think, as I say, the optimum that we had achieved cannot be re-engineered. If not, of course, it can be re-engineered, but at the cost of embedding in the system redundancies, which cost, and those costs, have a repercussion down the lines, all the way down to the consumers or the clients, no matter what. And also, I think it carries, a geopolitical agenda with it. It's not only the fact that you're trying to reshape your Lego in a different manner. You may not end up with the same quality component that you had, achieved as a result of having done since what we have learned from the Toyota times, the just-in-time, and we'll have to build excess inventory. Excess inventory will have an impact on financial results of companies, on their stock evaluation, on their market cap, on the investor sentiment. It's a virtuous or vicious circle, depending on how you play it, and it will have impact. So yes, the answer is, Kyle, you can reshape it by transferring and replicating at a local level, but it will come at such a cost that I would really take for granted such a humongous response by the consumers, because everybody now can go on Twitter and just manifest his dissatisfaction with something, and this becomes global, not in 24 hours, in 24 minutes. I think a
Or 24
multinational.
seconds.
Or yeah, but let's say that it has to be digested, whatever, in a day, everybody is on the same page. And you have movements of consumers as you have movements of protesters and rioters in the streets. It's the same thing. So I don't think multinationals can escape that conundrum very easily, because obviously some of them will shoot themselves in the foot by adopting the methodology. So what I think it will happen instead is there will be a lobbying power exert onto the powers that be, the top brass governments. Ultimately, if you think that some of the multinationals, asset value or cash at hand is bigger than the GDP of entire countries, so you can imagine that this is going to happen very reasonably and very quickly. Coming back to what Gary said, I wanted to just elaborate a minute on what's happening in Europe with digital transformation and artificial intelligence, because the European Union government has created the FACT, what is the first Eurobond. It's about 2 trillion all in all, 1 trillion already earmarked to be deployed over the next 3 years, 50% of which, so it's €500 billion, is going to be deployed for artificial intelligence and digital transformation, which will have a tremendous impact, and not only, of course, on Europe. The other 2 pillars of the European Union strategy on this mega plan is green economy, where it's already the world leader, and the last one is infrastructure and general revamping of the healthcare. But as I say, artificial intelligence and digital transformation can be a fantastic springboard now for companies here in Europe, and also for non-European companies to get funded, to win government contracts, to participate in public-private initiatives. I mean, my group has created a program to help companies that want to establish a branch, a subsidiary, or a NewCo in Europe to do so under our umbrella. And basically, we will take care of all the marketing, lobbying, and public relations and sales for them just under one roof, just to let them get into this a pipeline of capital, know-how, exchange of experiences. Because you see, I mean, probably the leverage effect from the private sector, which piles up on the government money, will be about a trillion all in all, what with government money and private investments coming along for the ride. This is Europe, and again, Europe has taken this very seriously, as it's taken very seriously climate change, and we've been pushing the green economy agenda. For example, I can tell you, Italy, my home country, had a 25% target of production of energy from renewables. Well, it now has 50%, and has been, over exceeding the parameters, and so have many other countries in the European Union, from Scandinavia to Germany. I think that there's a lot of space for maneuvering to achieve the efficiencies that we may end up losing as a result of this realignment of the supply chain. So we can, it's a wash-out basically. I think we can end up for sure making money and saving on costs by adopting the new technologies. And I also think that I would say in the mid to the long term, the situation will go back to normal, even if we would call it a new normal, but I don't think we can not be global. We cannot afford not be global. I mean, unless we want to brace ourselves for a global suicide, but I don't think that that's the scenario that we're going to face.
Sundar, same to you. I mean, what are you seeing in this? I mean, there's a lot of shifting towards to India around manufacturing, and to Giampaolo's point, I mean, are these will things continue to stay global, or will they still go more towards this localization, which we're having, due to an impact right now, we're having to see happen? So what are you seeing, and what are you seeing on your side?
Well, I to a great extent, I agree with Giampaolo. And the idea is that in our country, the Prime Minister has been very vocal about the going local. So I know that's one aspect that India has really taken it to heart, given this pandemic and seeing the supply chain disruptions that have happened. But just to take a step back, the key demand supply related trends that have really impacted is moving away from consolidation. I mean, clients are moving away from the idea of consolidating into a single factory or a single warehouse, servicing an entire country. So they have actually done multiple resizing their factory, resizing their warehouse, going regionally, and thereby reducing, single source dependencies with hub and spoke model. So I have seen that. Then shifting of strategy, again, Jim Fowler mentioned, I think the concepts of JIT, vendor managed, I work for companies like Unilever, where I implemented JIT, just in time, or vendor managed inventory. Now, today, when I take a step back and see in this pandemic, all those things have really caused disruption because I have not been able to reach those commodities back to those people who needed them. So people are thinking of stocking up instead of, in time. So it's really spanner in the wheels. I mean, people are re-looking, rework like big, large, multi-transnational companies in India, like P&G or Hindustan Unilever, or you can talk Paints domestic for a non-durable company. So shifting strategies. So post-lockdowns, companies are changing. The third one is the demand for warehouses in regional look. I mean, e-commerce is growing. Today, people are sitting at home. They are worried about the pandemic. I think that's, as Jim Fowler put it, it's going to continue for at least 1 month till you really get the vaccine. And then people are sure that they are not really going to get it. So e-commerce is doubling up in growth. I could see Zoom downloads in India to the extent of 73 million. The valuations have tripled over time. And you could see Facebook buying the digital Reliance Jio to the extent of $16-17 billion. So there was 3 large funds along with Facebook, which invested in Reliance Jio. So I also see a lot of AI, Internet of Things, technology working in the manufacturing and the warehousing and the logistics function, because wearables, tracers, automation of a lot of things within the warehouse or the factory, reducing human interaction, and more focus on innovation in safety and hygiene. The boom barriers are coming up, the sensors are coming up, the equipments that are needed at the entry of the factory or the warehouse is coming up. People are trying to reduce the density of people, but all of this requires huge amount of technology, and then also the process or the workflow to make it work. I think that would really that's the tipping point when people rethink about, after this pandemic, how they're going to service their consumers and customers, both local as well as global. I think Jim Fowler's point was valid. You can't really be local when you also got markets to service globally. So there are factories in India which export. So obviously you have to service those people. So if you come back to India as a country, I mean, in the Asian context, it's among the fastest growing economies till the pandemic broke out in terms of GDP growth rate. But I think this year will be negative, or maybe just grow at 1%, or maybe just break even. And, we still have received foreign direct investments of close to 73.5 billion during 1920. And I'm saying, as we speak, we continue to have Blackstone is acquiring distressed commercial real estate yield assets. The REIT, the one REIT was launched last month during this COVID times, which was to the extent of, I think, $5 billion market cap. The planned investment in infrastructure is to the extent of 1.5 trillion across highways, railways, ports, all planned. I think there has been a huge amount of financing that the government has to do. And as Jim Fowler pointed out, there is going to be repercussions in terms of overall the geopolitical, the financial state of the economy, because you're going to do what US did and gave the stimulus, and that's going to have its own impact. But coming back to our topic of supply chain logistics, I think the manufacturing sector, the supply chain logistics is going to see an enhanced growth potential as we slowly come out of this pandemic. And I think it's all about seizing the opportunity as we go along. And we have to, I think localization will happen because people and countries and regions will have to depend more in terms of, not having one more pandemic and not being able to do what they could not do this time. So localization will be there as an impact. At the same time, it will increase domestic consumption, domestic product, and lead to the growth. That's some of the things that I think will really happen. Having said that, decentralized demand due to rapid digitization is going to happen. The digitization is really going to make the local global, as I see. For example, Amazon has invested so much of money into India and now is actually pushing factories, warehouses, etc., which are being regionally balanced. So it's a global company. It's come to India. So it's got, so you reach any parcel anytime, anywhere. So I can even order from US, and it's really, so it involves freight, it involves shipping. So you're actually not being very local, because you have to use services of vendors, supply chain guys across the globe. So I think while you become local, what I mean is every country is thinking of localizing to improve their sustainability in terms of supply chain, so that they really don't have to spend longer lead times, or during shutdown times be able to manage for a longer duration of time. At the same time, they are going to make their economy more robust. I think that's what will be the endeavor of people. It's going to take a little bit of time, because there are repercussions from an economic and a financial standpoint. There is a stress on liquidity. The demand is muted. I think large corporates, large industrial houses, I'm sure Warren would have seen it, as he's part of being in China and stuff. People are uncertain about how much should they produce and how much they can stock up, because everything is financially one. And then if you don't sell your inventories, what do you do? So I think all of this will lead to a rethinking on the manufacturing and supply chain strategy. I'll give a anecdotal evidence. When I was working with the Danone group, which was into biscuits and the cookies, I did a complete re-strategy of manufacturing. This was not during pandemic, much before that, but it was a very good experience in terms of overhauling the entire manufacturing and distribution systems in the country. And I figured out, given our own country's laws and the taxation laws of different union territories and states, it was better to have shut down most of the factories and have larger factories across 4 corners of the country. My strategy was lowest cost to market. Now, when I look at that, what I did, lowest cost to market. Either I have to be closer to the raw materials, or I have to be closer to the finished goods market. Today, I'm thinking reverse, because the pandemic has made me think, saying that I have to reach my product to the consumer wherever it is available and whatever time it takes. So I have to invest into a lot of intermediary supply chain and logistic facilities, or manufacturing and warehousing or logistic facilities, to make it happen, whether locally or if my market is global. I have to ensure that I got a bunch of, I will take advice of Warren, I'll interview 30 suppliers, even if it is a shipping company, to ensure that it goes. So, but the whole thought process of doing business in the new environment and to make profitable business is going to be the hallmark to re-engineer your supply chain as you go along. And investors are looking at that, because broadly factories, or I am into infrastructure, building, supply chain, industrial, but then we build it and make it as a yield asset. But then the point is, investors also look at that the same way.
Well, and so I want to get to that real quick. Is we're coming up close to the lightning round here, but in terms of opportunities, right? Investors are looking at different things here, and both as investors, but then also entrepreneurs, where we should be investing our time and our capital. Where are the opportunities in these markets today, whether it's manufacturing, supply chain, and logistics? And I mean, from what I'm hearing and what I'm seeing, it's anywhere from the beginning to the end, right? From the early conception all the way to the consumer. There's something in through that entire pipeline that's available locally and globally. And Gary, let's come to you first. So where are you seeing the areas of opportunity right now for investment and focus in these areas for those that are either deploying?
Let's look at it, right? We talk about AI, but the supply chain, the digitization, I don't know, Sridhar had mentioned, absolutely, because we need to go away from the paper processes and these silos. And the other thing is SaaS, right? We don't need, now in this new digitally transformed world, what did they say? McKinsey said the SaaS solutions were growing, this was back in 2019, like 6 times faster. Well, I'm sure that's dramatically increased today. So SaaS solutions, look at the issues with, circular supply chains, where you need to have things like refurbishment. Look at refurbishments on Amazon, how much that's changed. We're refurbishing projects, we're recycling products. So that's another issue. The other thing is Internet of Things. We need to have sensors out there to figure out what the hell is going on. So the view from my standpoint is we need a dashboard that we can look at. And at Yva, when we do remote workforce management, we had a dashboard you can look through the organization. Wouldn't it be beautiful to be able to look through the organization on the supply chain to figure out where something is exactly at that point in time. And so
yes,
big data.
yes. I'll just interrupt real quick. Yes, the idea of digitizing that entire process and taking it from physical to digital should already have happened. It shouldn't even be a want and a desire.
Exactly. And then we got to be able to forecast using AI and big data, forecast what the hell we're going to need, when, where, and why we're going to need it, and to be able to forecast it. So that part of big data is critically important. And then robotics, robotic process automation and robotics. I was in Walmart recently and I saw a robot in Walmart going down through and looking at the supplies on the shelves. We got to, and then one other thing, Kyle, we didn't talk about.
Yeah.
At the front end of the supply chain, we better make damn sure that we're testing people and we're going down through to make sure that those people that are butchering the meat, are building the products, are not getting sick, and we're keeping them out. So having thermal detectors, all kinds of tests on the front end so we don't disrupt the entire supply chain. And we don't talk about that, but it's critically important.
Well, it's a new piece of the supply chain. Let's leave it at that, is that it's a new part of the supply chain that's been introduced. Well, and I know that everyone can comment that it's been there in touch and go spots, but now it's a requirement in many areas of supply chain. Gianpaolo, to you, where are the opportunities? Where are you seeing where investors should be paying attention to in terms of capital, and then also where they may want to be building as entrepreneurs?
Well, 80% of the world GDP is made by the US, China, the European Union, and India. So the rest of the world, and it contains some important economies like Switzerland, the UK, Russia, Canada, accounts only for 20%. But it could be like soccer, like football. In that 20%, something interesting can happen too, because there could be surprises. There could be, the classical underdogs that come up and find a different angle by which they can do something, and by this they can attract capital. The bulk of the capital will go where the bulk of the GDP is, in that 80% of the world. It's a Pareto law, and it's very well known. So investors in times of troubles will try to stick with what they know best, and countries that give them the rule of law, infrastructure, and ease of transportation and communications, the usual suspects. Again, the reshoring that Sridhar has mentioned, I think it applies to go local. It applies primarily to countries whose economies were already prepared, like India or Germany or Italy or the US, to reshore. Countries that do not have the infrastructure and to have to build it from scratch, I think is going to be pretty difficult, because there will be also the impact on the bottom line of the redundancies and of the excess inventory that this disruption of the supply chain entails. So I don't think that a lot of countries that do not have already the manufacturing infrastructure can develop one that is going to be the oxymoron that Kyle was mentioning before, a supply chain that's agile and flexible. It's difficult. It's difficult, especially because the consumer are really holding the thermometer, and the temperature is in their hands, so they can veer to a competitors right away and put companies' belly up in a New York SEC these days. So we've seen big companies going bust, and don't forget it. And we've seen unicorns come up. Even there's one in Colombia. If you think, the only one in South America. So far only China, Europe, and the US had unicorns. Now there's a unicorn out of the, as I say, usual geographies. So I think we're going through a very exciting moment. There are a lot of opportunities, and I hate to say that, but as in times of war, and thanks God this is not a war, although it has a tremendous impact also on human lives, I think there are possibilities to really invest and generate hefty returns in a legitimate way for the savvy investors and the ones that are capable of thinking out of the box.
And Warren, to you, where do you see opportunity for people to be investing? I mean, you've been doing a number of building companies, but also some investments in this space. where would you be looking or advising those to start placing bets and be mindful of in terms of opportunity areas?
You know, I've made about 65 investments over the last 30 years in addition to my own companies. Each time I'd harvest them, then you have to deploy that capital. So I developed a family office and made a lot of investments. I think the opportunity is very much global. I think, sure, this pandemic is pushing things to build it in your backyard, build it in America, but it's not going to go that smoothly and that easily to a localization model. For example, Apple, biggest company in the world, most valuable company in the world, and they're manufacturing all of their iPhones in China. I don't think America is within a decade away to be able to do that in this country. China is so much more advanced in the manufacturing sector than the United States is. We look like a little peon in manufacturing goods. I wanted to share a little story earlier when you asked me to share a story. Let me share it with you. I was running a company that was originally called SPAR, S-P-A-R. And we started off with the concept of adding a USB port for charging to let your portable speaker recharge your cell phone or your tablet. And we also added waterproofing and shock resistance to the speakers. Well, I didn't go through my normal process on suppliers. When we started the company, I wasn't yet ready to go do that big process to qualify the suppliers. So we end up going over to Europe. We had about 50 suppliers that wanted to carry our product. 49 of the 50 said, you got to change the name though. SPAR means discount or budget in German. And in Europe, there's all these SPAR stores. So it sounds like Dollar General or 7-Eleven. So I'm out there trying to create the highest end speaker in the world. And my product in Europe sounds like Dollar General budget. So then the next problem occurred when the product arrived from China. It didn't meet our mark. Our standard was here on audio quality. It was down here about 70% of what we spec'd out. Well, I theorized that if we would have put those into the market like Walmart and other retailers would have realized the quality is not up competitive with Bose, that we wouldn't be getting reorders. So I took the first $700,000 worth of product to the dump yard and dumped it. The other thing we did was we changed the name. We brainstormed for the next few weeks and we changed the name from SPAR to Braven. And then when we relaunched again a few months later, we exploded. We went from 0 to a 25 million run rate in about 6 months because we did it right the second time. So we fail fast and get it right. And we got it right the second time and it just exploded with growth.
That's amazing. That's amazing. Well, thank you, Warren, for that story as well. And thank you all for your insights. We've now hit the lightning round. So I want to come to everybody, make sure you get closing thoughts in and let everybody know where they can find you. So Gary, let's start with you. Any closing thoughts to add on this topic today? And then where can everyone find you online as well?
Yeah, I mean, this digital transformation, as I've said many times, has given companies an incredible opportunity to be able to get into markets they would normally not be able to get into and to be able to do it quickly. The supply chain needs to be more efficient, and companies out there, in particular AI companies, can have a powerful impact. So I encourage them, now's the time, do it. Just do it. Get out there. And you can reach me, Gary Fowler, LinkedIn, or Gary at gsdvs.com. I appreciate it, Kyle. Thanks.
Thank you. Giapalo. Closing thoughts, and where can everyone find you?
Yeah, you can find me on LinkedIn at Gianpaolo Parigi on LinkedIn, or on my personal website at gianpaoloparigi.com. Thank you.
Awesome. Shadar, any closing thoughts, and where can everyone find you?
Overall, the common theme of global logistic industry has been impacted by COVID-19, but I think emerging markets are, however, less affected, and the effect may not be significant. So from an investment perspective, regardless of COVID-19, development continues to move forward as emerging markets continue to move forward, and they put a significant amount of investment in the infrastructure, roads, rails, ports, etc., as I see. And I also see a lot of attraction of FDI coming in different funds investing. Additionally, while US trade relations, China, etc., continue to be of a concern, as we all keep watching, I think because of the investments getting in pulled away from China for the time being, I don't think so they can do it for a long time. I think the benefit goes to the emerging markets like in the Asian context, where they are all the manufacturing hubs. So obviously they get that opportunity, and the investment should flow in there, as I would see, because shippers are pivoting towards more and more emerging economies to put their money in and bet on this entire value chain of the supply chain, because manufacturing and warehousing and storage comes very handy. So while continuing investments in infrastructure, I think the focus will be on to improve the investment cycle in healthcare and all this kind of stuff during this thing. And I would, my advice would be to look at these sectors to invest. And as I see yields and REITs coming up and people trying to buy at good value. Coming back to my thing, Sridhar, you can find me at my LinkedIn contact, and also at sridhar.n@hiranandani.net, where I run the industrial logistics and supply chain business as a CEO. Thank you.
Wonderful. Thank you. And Warren, close us out. Any last closing thoughts, or where can everyone find you online?
Sure. First, where you can find me online, my email address is warren@osbornco.com. That's OSBORNCO.com. And you can find me on LinkedIn as well. Just Warren Osborne's my name. If you search there, it'll come up. Closing thoughts on supply chain and working with manufacturers. Do your homework up front. Research the suppliers, interview them, sort through about 30 plus, and qualify that supplier that you choose so that you marry and get in bed with someone who is going to be a quality partner. That is one of the most critical lessons I've learned over the last 35 years of doing outsourced manufacturing. Now, this all began with my own factory in the United States, where I was manufacturing VHS tapes and duplicating them. So I had the experience of running my own factory in my 20s. When I was 25 years old, I had 125 employees and a 34,000 square foot factory. And that really set the stage in learning how to manufacture, how to automate, how to bring in robotics. And then when I went to China, I actually helped many of those factories automate and systematize and roboticize their processes. So qualify your suppliers to the nth degree. Make sure you marry someone who is going to be a long-term partner.
Absolutely, absolutely. Just like taking investment, you want to make sure you build a strong relationship with those. When it comes to suppliers, I mean, even stronger in some cases, because of what we've talked about a lot today, is you're generally dealing with very long distances and that remote capability. So make sure you do your research, make sure you build the relationship, meet plenty, find the right one that not just suits your needs, but also that you can build that long-standing relationship. Gentlemen, thank you so much for joining us today on today's episode of VCTV, talking about manufacturing, supply chain, and logistics. As well, audience, thank you very much for tuning in today. If you like what you heard, click subscribe, give us a thumbs up. Also, if you'd like to be on a show like today, either as an investor to share your thoughts and insights, or as an entrepreneur to have the chance to pitch us in the live audience, do please reach out. Also, a big thank you to not just our panel, but also to Elena and to the entire LA Token team for making VCTV possible every single day. I'm Kyle Lacotte, your host. We'll be back here in just a short little bit to talk a little bit about what's happening in this next part of the supply chain as we look toward consumer and consumer products along with e-commerce. So taking that next jump into marketplaces and getting the products that are manufactured into consumers' hands. So everybody, thank you very much. You can find me online at Kyle Lacotte, and we'll see you back here shortly on VC.